Welcome to the Zoom trade along. Trading for profits. Watch, listen, learn to earn. Should see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. If you need trading software, let us know. We're here starting at. Hey, good morning.
Can everybody hear me all right?
I can't hear you.
Well, that's good. It's good. It's a start.
You got the ball.
All right, let's give you our levels for this morning and see where the market takes us. The market continues to have some upside moves here, simply based on the fact that numbers are going to be the market is hoping numbers will be turning around, and they seem to be right now. So we'll see what happens. Pivot this morning is 39.62. 39.62. Resistance 67, 74, 80, 85, 92, and 39.99. Almost 4,000. Wow, we're even talking about it. Support below at 55, 49, 42, 37, and 30. Again, pivot is 39.62, support at 55, 49, 42, 37, 30. Resistance on the upside at 67, 74, 80, 85, 92, and 39.99. Okay, market again is in that slow upward trending trade, which we have to be a little bit careful with how we trade it. Just keep your stops in. The move yesterday, there was a one move right after I got off here in the morning. They had one flush down. They got down to our support area, so that was hopefully a good thing if you were able to partake yesterday. And the reason that the market flashed down yesterday was because GameStop went down 15% in one swoop, and the whole market followed through. So that's what the market's doing. It's fickle. It's very one thing moves and then all of a sudden the whole market moves for a span of like 10-15 minutes. So you can see the market is just grasping for any reason for it to go down, even though it was one stock for no reason. Well, I don't know what's going on with GameStop. Like I said, it's just it's a crazy. I never understood what's going on with GameStop, so I don't plan to start to think about what's happening there. But anyway, that's what happened yesterday, right in the morning and late morning. And then you had that. And now after that, it was that slow rally that if you had many reasons to get long, I think, if you were trading with us, and just kind of walk away because put your stop in and walk away, because otherwise it is just a slow market. Again, hopefully we get some volatility in the morning, so it gives us a little opportunity to trade. We never know these days. We'd like to average about 4 to 5 trades in the course of a day. Sometimes more, sometimes less. The last couple of weeks, we were definitely averaging much more than 5 trades a day. Easily could have made a case for trading 10 or more, and all with logical reasons. I mean, not just for trading's sake. We do like to have reasons why we put on our trades. We are actually trying to scalp the mini S&Ps here. We're looking for about 2 to 3 points on our opportunities. That's based on the price action opportunities that we have, the levels that we give out. The market, we don't feel markets go straight up or straight down. Consequently, we're looking for those areas, inflection areas, where the market will give us a little bit of a bounce. And so consequently, that's what we're trying to do. We're trying to find these areas where the market will give us a chance to scalp the market. 2 to 3 points these days is probably an adequate stop and target. Again, it all depends on volatility during the course of a day, so that always comes into play, and the lack of volatility also. All right, so it goes both ways there. So let's see what happens, and we'll see what the day brings us. We give you these levels as a kind of a guide to the day. There's nothing etched in stone here. We can add to them, subtract from them, delete them. All depends on the price action, but it's a guide. This is a starting point for us. Then we kind of let the market paint some bars, and then we find some other trades that we might like for reasons that we have figured out to work for us in the past. And those setups also get thrown into the mix. And the combination between the levels that we give out plus the price action opportunities that occur create the opportunity to trade. And that's what we're looking for here as traders. So all you need to do, or all we're trying to do, is actually find opportunities to trade. So if you look at the chat box area, for those of us who maybe have come in a little bit late and missed the levels, those levels that we talk about are in the chat box area. And you can catch them there, see what they are, and see what's going to happen. Hopefully something happens. But you can see here, for the last 6-7 hours, we've been in a very tight, narrow range. So your expectations have to be dialed down just a little bit. This is what happens. Where's the VIX got to be? What, the VIX maybe 20-ish? Yesterday we were 2140, and we continue to rally. I wouldn't be surprised. 19. Oh no, we cracked the 19 handle, anywhere between 2004 and 1992. That's weakish. We're getting into the high teens here. Again, doesn't bode well for our trade. But again, we have to take the good with the bad when we're trading. Just like maybe you make some money on some, you lose some money on the other. It's okay. Patience is important. If anybody has any questions, chat box area is where you should put them in. Anything about how we do things, what we do, what we're looking for, any of those questions, criticism as to how we do things, whether you like this room or not, it's fine too. I can take it. All right. Yeah, we're just kind of hovering here around our pivot, both sides of our blue band, both sides of our pivot, extremely narrow range. But again, this is what happens. The market is, again, if you were trading yesterday afternoon, and we warn you against trading until the late afternoon, you get that one-way trade, that last bar of the day, and especially in the hourly, it becomes more one-way, very difficult to scalp. If you were able to get long, then you did okay and stay long, but you had to just kind of step away and come back. You couldn't really trade the market. You just couldn't really trade it. Thanks, HD, because it was just untradeable. It's really that simple. Anybody here wants to trade is me, and when we just can't do it, we can't do it. Yeah, the 48 yesterday, yes, the 48 level worked exceptionally well, and then, but above that, once it got above that late in the afternoon, it kind of ran through. I don't know what we had 54, kind of ran through that, but then again, not surprising. Is there any news that made the market run up in the afternoon? Yes, more bulls than bears. Really that simple. I know you want me to come up with some really fancy reason. I'll just say we did have retail sales come out this morning. It was a little worse than expected, and they're attributing that to the cold, the barrage of snowstorms that were hitting across the country in February. So retail sales were a little slumped, but they adjusted previous months up higher. So they're thinking that it was just a one-off. Business inventories is coming out here at 9 o'clock, a small number, and then National Association of Home Builders Housing Index is coming out at 9 o'clock also. Both of those could be possibly, well, not both. Business inventories not so much. Well, that could be. It depends on how you look at it. But we'll see. There's a small number. Maybe it'll give us some opportunity to trade. But as you can see, we're trading both sides of our pivot. So tone down the expectation. We're just kind of hanging both sides of it. Just really, really quiet. And then there's a 20-year note auction that's going to be coming out at noon Chicago time. Those results. They're looking for $24 billion in a 20-year note auction or bond auction. It's not a note. Anyway, so that's coming out at 12 o'clock Chicago time. And then, so in case if you see something happening, you know why. And then at their yield on the 10-year right now is at 1.59. So it's hovering around that 1.6 area. See, let's look at you can just look at the handle and see if we're going to move. A 156 handle here. We were in the 160s for a long time. 160 now on low 170s, and now we're here, and that's created this fear, concern that pushes the market down for a little bit and then always seems to come back. Again, the numbers seem to outweigh the stimulus seem to outweigh all negative news about bonds, at least for a time being. I would say that as long as bonds stay below the 2% level, I think you can talk about it, you can fear about it, you can talk about the Fed doing something, but I don't know if that'll happen. President Biden is planning his first major federal tax hike since 1993 to help pay for long-term economic programs designed as a follow-up to 1.9 trillion coronavirus relief package, Bloomberg said. And the next initiative, which would come at a cost of 2 to 4 trillion, would be to be paid for via increases in both the corporate tax rate and individual tax rates for high earners. And the goal is funding key initiatives like infrastructure and climate change, as well as expanding help for the poorest Americans. What's on the table? While the White House has rejected the outright wealth tax as pitched by Senator Warren, as the market slowly inches its way up here, a little resistance around 67. It does target the wealthy proposals, raising income tax rate on individuals earning more than $400,000 per year. Individuals expanding the estate tax reach, tax rate reach, and implementing a higher income, higher capital gains tax for individuals earning at least $1 million annually. It could also raise the corporate tax rate to 28% from 21%. Par back tax preferences for so-called pass-through businesses, such as LLCs and partnerships, as well as a revised law to stop U.S. companies from shifting jobs and profits offshore. While the next major fiscal proposal might come with a large headline number, it will likely have a much smaller impact on growth in 2021 and 22, as the spending will be more evenly distributed over several years, and some of it will likely reflect spending that would have happened in any case. Goldman Sachs Research wrote in their note. Helping to pay Biden's domestic agenda, Treasury Secretary Yellen is reportedly working with countries worldwide to forge an agreement on global minimum tax for multinationals. Back in January, at her confirmation hearing, as the market upticks here, we got a little resistance around 67. At her confirmation here, she said she wanted to work with the OECD to prevent a race to the bottom on corporate taxation. However, the OECD deal would be challenging because of its non-binding nature and would likely need to be approved by Congress, which would maybe be more difficult depending on the specifics. As we come up here to the 67 area, again, depending on how you're scaling in, maybe you're in, maybe you're not. So a little number coming out here at 9 o'clock, again, scaling in around the 67 area. Half point above, below, point above, below. Anything that makes you comfortable trading is what you should do, or just the number itself, the level itself. But remember, it's an area that we are trying to find here, not one specific price, because we're not that good, unfortunately. All right, we're working this. And remember, we have a number coming out here in about 15 minutes. So keep that in mind if you're trading it, or if you got in, or if you're getting in. And these are rally markets, so they tend to trade that way, unfortunately. You know, we were hoping, we always hope for ebbs and flows, but again, we've discussed what happens here with these rally markets. And we got up here to 67, see what it wants to do. Trying to fight its way down. And fight its way is what it's doing. It is a tough little trade, that one, it rallies like this. No doubt about it. Well, if you needed 67, you got it. Again, we're mired in this the slow rally markets, and as expected, it's a very slow moving day. And you know, we try to get those rotations. Hopefully, we can find them. Either way, keep your stop in there and don't love a trade. I work in the area here. Yeah, we were working the area so long, we might come up on our number. Again, usually we like to hold a position on maybe 5-10 minutes, you know, but we're going on to 10 minutes here, so you know, just work the level. Maybe peel some profits, a little profits off if you got a little bit of a profit against the, maybe you got in at the upper end of the range there, and take some, peel some off. You know, not 2 points, but hey, it's better than just kind of you know, considering how slow it is. You know, just take a little bit off and just keep some on. Oh yeah, only 14 traded up there, Don. Again, you have to trade this market just a little bit differently than you would, you know, when it gets this way. As long as we understand, we expect it. You got to take a, you know, take some profits off, and then, you know, and then see what happens from there. All right, we're finally getting a little bit of rotation here, and here's our 2 points off of the push off of the top end there. If you got in at 67 straight up, you did okay. This took a little bit of time, but we finally did get a rotation, and didn't really take that much heat. If you got into the top end, that was a nice little rotation, and then just kind of watched it slowly tick. Yeah, you can open your eyes and you got a profit. You got a profit in there. That is one way of trading this. You can open your eyes after it's, because you get a little like nervous about it and you want to like do something. And the thing is just to be patient. You have your stop in there, and as long as you didn't get triggered, then you should be okay, right? So nice little trade there. Again, just took a little bit. It was just the time. The heat part was the time. It wasn't so much. It really took heat on the trade because that didn't happen. It was just the time factor where you were just watching it. So if you could have managed that just a little bit, then you did okay. So again, this is what we're trying to do. We're trying to find these areas of inflection, and the market will give us an opportunity to trade, make a little bit of money. And some of it is obviously sometimes it's a little easier than others, and patience is important, especially these days. And we come back down here to our pivot. Okay, so again, we're flat now. Let's see what happens. This is what we're trying to do. We're trying to find these areas where we can have the market can bounce off of, give us opportunity to scalp. Blue line worked again. Yeah, that's true. Your blue banders doing really good. Blue banders are your blue banders. You could have covered there. You could have maybe bought it, scaled in around that and our pivot. All right, we do have a number coming out here in about 4 minutes, so keep that in mind. We don't like to trade around a number. Next level on the upside that we have is up at the 74 area. Holly J, 74 again. Could you have bought it? You definitely could have made a case for buying it there at the blue band area if you were a little aggressive and looking for a place to get long. You have to join the blue band army. Yeah, well, I keep pointing it out to you there, Peter. That's my job, is to point out things. All right, again, so next level on the upside is 74. Support obviously was a blue band, or 62 our pivot, so somewhere in that range. Next level resistance on the upside is up at 74. And well, better downside support would be at 55, but that's another story. Bond market very, very quiet. Number coming out here shortly. So we are flat right now. See if this market gives us any movement. 74 on the upside. Downside would be well, 60 our pivot, or better to 55, depending on how much risk you want to take. All right, numbers out here. See if we get any movement at all. There you go, Don. Look at you calling it out again. All right, little downtick here after this number. Hey, Mark, you still here? So you weren't here in the room yesterday, but Don gave you a really nice compliment yesterday. He said that that Mark, he is as handy as a pocket on a shirt. Quote. That's a high praise coming from Texas guy. Pocket on a shirt. what happens when you get Play-Doh in your headset, and then now he needs you now every time. All right, we're range bound here. We found a little higher range than earlier. So see where that takes us. All right. I had to write that down, by the way. I never heard of that phrase before, so I wrote it down so I made sure I didn't miss an exact wordage on that. I tend to write down a lot of things that Don says because they're unique. Well, I mean, that's high praise. All right, so we talked about Biden and his possible raising taxes, which again, yeah, somebody has to at some point, right? They can't be doing what we've been doing over the last year without doing something. And a lot of it is a corporate tax, right? Which again, probably which is probably, you know, reasonable considering all these companies are making goo gobs of money. And we're not talking about the little companies, because most little companies are partnerships, S corporations. You know, we're talking about the S&P 500 companies. So see what happens there. Fears are growing in Italy about the AstraZeneca situation. Germany, Italy, France joined in. Joined the ranks of European countries that have temporarily halted use of the AstraZeneca COVID-19 shots after several countries reported possible side effects. The move is another blow to the continent's struggle vaccination rollout and threatens credibility on the shot itself. Denmark, Norway stopped giving the shot last week after reporting isolated cases of bleeding, blood clots, and low platelet count. Iceland and Bulgaria followed suit. Ireland, Netherlands announced suspension on Sunday. And while Switzerland, Latvia have also jumped in on the bandwagon. So they're definitely having issues there with, they wanted to get a cheaper cost that didn't go over too well. And that took a little bit of time for them to get cheaper. In the United States, they're just paying up, and we're getting those doses available quickly. And that's why you're having these like surges in Europe where they're locking down again. They were trying to do it like all as a group and put a good face on it. And it's turning out that it's not. They're behind the curve here a little bit and trying to get past this stupid disease here. It's not stupid. It is what it is, but that's why they're a little bit behind the 8 ball. And that's why they're locking down again, believe it or not. It's crazy as it seems. I mean, I guess we're lucky here. I don't know. I don't know if it's luck or just that, we just got the vaccine and just giving it to everybody. Africa's not experienced that, but they're experienced, well, in the AstraZeneca one you're talking about, and they're overreacting. Yeah, they might be overreacting just a little bit, with the whole group. Can we repeat the levels in the chat box area? There's a levels in the chat box area. I think they also, it's a little more, they're not so optimistic about vaccines in Europe, and it's creating, this fear of using it, and they're being overly cautious, and they're just not, the EU as a whole is not distributing it fast enough. They didn't buy enough. They were looking to get a cheaper price while the United States paid up. And then once that happened, then they're behind the 8 ball because they get behind the people who are paying more. So it's complete one thing leading to another shit show over there. Sad, because we should be moving along here as well. Should be one unified situation, not, happening the way it's happening, but it is what it is. So we'll see what happens there. Hopefully at some point it's gonna all do all right, I think. Hope. In the early spring, a feature dubbed the App Tracking Transparency will be rolled out on an updated iOS 14. Apple, requiring app that gathers tracking data to ask Apple user for permission. The update has already supposed to arrive in September of last year, but is delayed following the pushback from the firms, including Facebook. The new rules also stipulate that if companies use alternatives to identifier for advertisers, I guess somewhat is like a cookie, their app could be blocked and suspended from the App Store. I guess this is for Apple stuff. They got privacy issues there. This whole thing is getting a little weird with all this information that these people are getting from us with our phones. How many times and this happens to everybody, how many times have you gone on the internet, looked at something, and then these pop-ups kept coming up on your phone that tell you, hey, I got, you looked at this shoe or pair of pants or something, and and all of a sudden the same pair of pants and shoe comes up over and over again as you're looking at other stuff. These privacy issues it's getting a little weird, very strange out there. But all right, so really, as far as news is concerned, nothing till, well, I don't know if it's even no news. What do you call it? The auction results at later on. No, Don, you're pretty safe with your flip phone there. You don't have to worry. You're good. Don's with us says he doesn't get that with his flip phone. Absolutely. There's another reason to invest in a flip phone. Not. But hey, you know, HD is age BlackBerry. That's true. Maybe HD said that they get ads based on conversation having in his house. So we had one of those Alexa things, and we had basically had it up there for. If you did buy the Blue Band, by the way, you're doing okay, because it dipped right down to it again and came back up. Not the worst idea if you did jump in. Just to let you know that we are trading, even though I'm talking about nothing. Anyway, so well, I did mention it before that the Blue Band on our pivot is a little buy area. So yeah, we had one of those Alexa things, and we got it basically just to. Could we repeat the levels in the chat box while we're chit-chatting away here? Maybe. There they are. Okay, good. So we had one of those Alexa things, and then this conversation started about it picking up on stuff that in the house when you're not using it. We got it for just for like music. It's good to have instead of just tell it to play any music you want, and it plays the music. Shuffle some music of whatever, which is kind of cool. In case you're working. Want to hear something, so that's not so bad, right? But then you hear the thing about, oh yeah, it's on even when it's not on. So we just unplugged it. Don't even have it on anymore. They're kind of cool though. I mean, tell it to play any music you want, and it does. And yeah, records 24/7. That's a lot of recording for the whole world. I mean, for everybody that has one, you got to wonder about that a little bit. How is that possible? Where does all that information go? It is very creepy. That's an understatement. Well, we are range bound here, as you can tell. Not much going on. to giving driving directions to 3 million people at the same time. I believe everything these days. I mean, and nothing surprises me. Absolutely nothing surprises me anymore with computers and stuff. All right, again, if you did maybe find that little buy area down there at against our blue band, maybe you got long there. If you did, you're doing okay. Tight little range we're in. But you never know. We could break out like yesterday. Like I said, yesterday they had a little flush to the downside, and the reason was because GameStop hit a hit. It was flashing down, and they had their 15% limit. I mean, seriously. I mean, they can pick on anything to sell it off here. The dumbest news possible, and they will. So careful. It doesn't take much here to get caught up in a vacuum. Came right back, but that's another story. It did go down to our support level there, so maybe. I mean, sometimes you need those kind of moves to give us a fill someplace, right? I mean, so you're hoping somewhat that you're waiting for a move one way, some goofy news, and then you get the volatility, and you're like, "Whoa, what's happening here?" And you get scared, and But sometimes you need that volatility to get you filled at a level that we have. You wouldn't have gotten it any other way. That's the thing, right? So as much as and these things could surprise you at any moment. So it's like a double-edged sword there, where you're hoping for something, and then when you get it, it runs you out, and then you're like, "Oh, what just happened?" But it does get you filled. So, like I said, it's kind of weird these days when it's slow like this. You don't know what to ask for, right? But patience is important. Waiting for the opportunities, very important. Talk about that all the time. So we're, that's what happens when we get to these new highs. This is a trade we are expecting, and it's we have to pick our spots and be very, very patient. Because does play out that way sometimes, and you have to just kind of hang and wait for it to give you a chance. We already had one chance this morning against our first level of resistance there, and it kind of worked out okay for us. So I guess, if we had to stop, considering that we're not doing anything, well, we could be okay. One trade. If you did buy our blue band a couple times, then you got two nice trades. Yeah, but that's all the market is giving us. Thing is about what we try to do here, we're not trying to create trades, right? Especially when it's slow like this. We are definitely at the mercy of volatility. So anybody has any questions? Good time to ask, obviously, when it's slow like this. So you should ask away. All right. We will have a class later on this afternoon. Peter, if you're still here, if you're still awake by then, we'll try to finagle a class in. Not much to talk about, but we'll try to find something. But we're, inching up here on the 4,000 level. So again, part of the reason is obvious. Stimulus kind of passed. Numbers hopefully will be turning around shortly. They have been. I think they've been doing okay. Extending here a little bit. Next level of resistance we have is the 74 area. Trying to inch up here. I'd love it if you, a little bit of a buy there. I guess you could say that, but yeah, it's one of those things where you're gonna have to just jump in and hold on and hold on and hold on. So it is a little bit of a buy here above the 69 area. If you did get along, see if we can get up there to 74. It's going to test your patience, that's for sure. Yeah, keep you a little long here, looking for the upper resistance area. Again, we are slowly inching up here. The play here is to get a little long. Obviously, where you get in is going to be how you're going to manage this trade. But it's going to be one of those trades where you just have to have a reason to buy it here. Now, see and wait and see if we can get a little bit of a rotation to the upside. Good idea there, Casey. Really good idea. He's taking his money and running. Only you would think about going back to bed. Just want you to know that. Everybody's day here is beginning. Yeah, it's definitely a slow day, that's for sure. No doubt about it. I have market dipping down here a little bit. Maybe give me a. You're looking for entry someplace to get long. Blue band, maybe. I don't know. If you're trading, it's not even worth the aggravation. As you can tell, it's going to be one of those like I have a hold on to it forever. But it is what it is. And like I keep saying, there's always tomorrow. right. So again, just kind of watching this kind of slowly. We're trying to be long someplace. Maybe looking to buy it someplace in here. Looking for a push higher. Um, like I said, there's always tomorrow. It's getting to that point where we're giving it a fair chance, But I think as long as we stay above our pivot, 62, we have a chance to uptick a little bit. Obviously, if we get below the pivot there at 62, then we can look at our downside support there at 55. Yeah. Not much to discuss here. All right, we've come down here to our blue band. I don't know. You never know. Could get something. If you waited for our blue band, you're getting paid off here. Very, very nicely. Patience prevails. Always talk about that. Waiting for the opportunity, waiting for the level. And that was a nice little, see, sometimes you need that little extra volatility there to give us an opportunity. I don't know what happened, but to give us an opportunity. That's what you wait for sometimes. All right, nice trade there if you waited for a blue band. And a nice rotation off of it. You're so demanding there, Don. So demanding. Okay, again, we were trying to tell you to find a place to get along. Hopefully, you settled in an area there where you could get comfortably along. And obviously, the way this is going, you have to just kind of get along and just kind of hold on to it for a little bit. But if you did, then you did okay there with that little dip down to our blue band area. Yes, we're trading mini S&Ps here, ES. Were you in our room when we gave our levels out this morning? Okay, there are the levels. If you look at the chat box area, there are the levels that we gave out this morning. You can use those as a guide for our day. We had our first level that got triggered earlier this morning at 67, which was the first resistance area, and then now we're looking to get long here, and we had the 65 area there for us to get long. If you did manage to get long around there, then you did okay. But like I said, these are the levels we gave out this morning, and we kind of use those as a guide the rest of the day. Good. As long as you figured it out there, Maureen, that's fine with me. Yes, we do this every day live. We used to be from the floor of the exchange, but because of COVID, we are in my cozy basement. I used to trade S&P. I used to trade bonds in the bond market for a long time in the pits. We used to do this, like I said, from the exchange floor. But now, because we've found a new home up here, and we're just kind of doing our gig from here. Things are a little bit slow now because we're hitting these new high levels, but we do trade S&Ps on an everyday basis. We give out levels every day. We also have an education course trying to teach you the concepts and ideas that we have so that you can independently do this. We like to scalp the market we're trying to get 2 to 3 points on our trades, depending on volatility. We also like to average about 5 trades during the course of a day. Sometimes we can do more. Today is one of those slow days where we're probably not going to have that many opportunities. If you were a little aggressive with kind of the work that we do, maybe we've had 3 so far. Depending on how aggressive you are, maybe 4. But yeah, so, and it's been a very slow day. That's what we do here every day. We basically are scalping the market. Again, our stops are about 2 to 3 points, but that's all dependent on volatility. If the volatility picks up and we have to expand our stops with our profit targets as well, then we do. But all of that stuff is dependent on volatility. If you go to Brad, who is the other guy here in this room, he'll send you a link to join in, and you'll be able to do that on an everyday basis. It's a very minimal fee to get in here on a weekly basis. So if this interests you, if any of this stuff interests you, if you've been trading for a while, and you want to, we have this little trading room here. It'd be great. Do you trade S and minis or ES? Okay, will do. Are you a trader? Are you trading minis or thinking about it? Okay, good. We obviously, like I said, we have an education course that teaches the methodology that we trade here. So if you've been doing this a while and you want to try to expand your horizons a little bit, that's great. And if you just want to join the trading room with our levels, that's great too. Oh, perfect. Perfect place for you to be. We'll definitely get you some, hopefully Brad is listening and he'll zap you some information. If not, he'll be on shortly and send you some information as to how we get into this room and everything. I just found out that if you go to zoomItlive.com, it brings you to our website, and zoomItlive.com, believe it or not. Kind of cool that if you click that, you go to our website and kind of gives you some information about what we do here, including registering to get into the room every day. zoomItlive.com. All right, we're drifting down here. Obviously, we've kind of lost this momentum to the upside here once we get below our blue band there, and well, we got to get below our pivot here at 62. If we get below the pivot there at 62, we've kind of lost a little bit of momentum to the upside, and then we'd be looking at our support level down at 55 is the next area that I would be interested in. So really not doing anything here, kind of waiting for the 55 area if we get below 62. Again, usually, we have some volatility and some movement. Today is one of those slower days where, sometimes it's watching paint dry. It's one of those days. The afternoon trade gets very slow. But if you're a new trader and we do have a class later on this afternoon at 12 o'clock Chicago time where we'll be using these live charts to expand on our education methodology here to teach. And if later on this afternoon, we do our classes in this Zoom room. So later on this afternoon, we will have a class, and yeah, simulators are good, but you need to know, you need the methodology to use the simulator, right? Nothing wrong with that. So if we can, even if you have a methodology, which is what we actually do teach here, to especially new traders. I like new traders because their minds are not infiltrated with some ideology and stuff. What we do here is pretty straightforward. We just use our charts that we have. We put together these ideas and concepts to find setups for us so we can trade. And we also have our stops that we talk about all the time, especially when it's slow like this. And the combination of our stops with the setups, hopefully we are profitable at the end of the day. Like I said, this morning, I think we've probably had, if you're a little aggressive there, maybe about 3 trades. And they should have been all profitable. And now we're just kind of floating here, testing their pivot. Like I said, if we get below the pivot, then we'll look for the support there at 55. I'm not doing anything here. I'm not going to buy the pivot or nothing like that. Yeah, maybe an aggressive trader would. And the thing is about this is everybody's got different concepts and ideas of trading. I'm not going to tell a person who is a little bit more aggressive not to buy the pivot. Maybe that's that's one of the trades that they like to use. And I get it. We show you a lot of setups, and then you try to find the setups that you can recognize and then execute. The ones that have worked for you over and over again and that you feel comfortable taking, and you understand why you're taking it. The thing is that we always try to tell you that before you enter any trade, you have to have a reason for trading or putting those orders in. And if you understand why you're trading it and you can recognize the trade, the setup, and then, just make sure you put your stop in and then let the market play itself out. And if it works out, fine. If it's not, then you look for the next opportunity. But we talk about different setups, and then until you find the ones that I can show you a lot of setups. It's just a matter of finding the ones that you feel comfortable and trade those according to your limitations and to maximize your profit. Now we did drift slowly down to the 62 area. If you are a pivot player, maybe you did jump in and you're getting a nice rotation there off of it. All right, we got to get below the 62 and stay there before we look for 55. So right now it's kind of in a little no man's land, right? Maybe it's still trying to hold on to this bullishness, especially if we close here above 67. But it's one of those slow days, so you never know. All right, so again, we're going to have a class here later this afternoon. Billy D, if you go to zoomitlive.com, if the Brad doesn't get a hold of you today, which he should, if you give us your contact information, we can give you a call. If you just put in your telephone number, we can give you a call there too, in case he's I don't know where he's at. He should be around here someplace, but he's not coming in. So, and only Brad and I could see him, the number. So we're not going to share it with anybody. We can obviously get back to you, but if not, you can go to zoomitlive.com and register that way. I think, pretty sure you can. All right, we're going to take a little bit of a break here. Again, we focus more on the morning hours. That's where our majority of our trades occur. We feel that there's good ebbs and flows in the morning. Take that with a grain of salt right now, but hey, it is what it is. So keep that in mind that we focus more in the morning hours, first 2-3 hours in the morning. they'll give us good opportunities to trade as the market gets a little bit different reasons to get into the market later on as the day goes on. I will get back here in a bit. All right. Well, we can see the laziness of the day continues. I think the FOMC is going to be later on this week. Yeah, if not next week. So it's one day. All right. So let us just say we're going to have a little class here in this venue. Anybody who's not part of the course right now, if you can kindly exit, and you can always come back in about an hour. Be great. Do have auction result, if I'm not mistaken. You can see what happened there. All right, now with the auction results, I said lately they've been very cautiously watching those auction results, and it's creating some volatility in the financials. And then we're getting a follow through here in the S&Ps. So the auction that I think this was a 20-year note auction. Again, something that happens every day, but at least Tuesday through Thursday usually. We haven't really talked about it that much because we haven't really had to follow it that much because it didn't really affect us. But they've been looking at that more and more lately, and you can see here how the market has created a little bit of volatility. And it's not the FOMC, totally different from FOMC is a meeting, and this is the this is an auction, the weekly auction. They have multiple weekly auctions here for the different expiration days of these contracts. And lately, we've been talking about having to watch them a little bit, at least be concerned with them a little bit, only because of the reaction the market has been creating towards them, and that is just what happened over there. So, all right. Anyway, for those of you who are not part of the course, if you can kindly exit and come back in about an hour, it'd be fantastic. I'll give you a couple minutes here to exit if you're not part of the course. And again, you're more than welcome to come back in an hour. It'd be fantastic. Just got a little sneeze effect here going. Just started sneezing like crazy just before I was supposed to get out here. Crazy. Can't stop sneezing. I don't know what the hell happened. I'm allergic to my basement here. All right. Again, if you're not part of the course, if you can kindly exit and come back in an hour, greatly appreciated. Otherwise, I'm gonna have to boot you out of here. And you know, again, you can always come back tomorrow. Not a big deal. Or in an hour. All right, I guess I'll do this myself now. Let's see. see. Okay. Okay. All right. I think we're good to go there, Peter. You got your. Can you hear me?
Hi, Saul.
How you doing?
Good, and you?
All right. Not too bad. Not too bad. Very slow day today, but it's okay. Can't always be busy. So, how do we trade these slow days is really the question, right? I mean, you have to be patient. You have to pick your spots, and you also have to remember to tone down the number of opportunities that you're going to have. If you're looking to trade a whole bunch, unless you're Don, we don't want to trade a whole bunch, right? Don, like, he's good. He can. I mean, look, if your cost of doing business is relatively low and you can trade a lot, then you should. Again, but he's also, not necessarily trying to get 2 points on a trade. Sometimes he's trying to get a point on a trade. As long as you can be consistent with that, and if you're going to make $50 and it costs you roughly $4, and if you can do it 10 times, that's okay. If you can do it, the problem is doing it consistently, doing it 10 times without any losses.
Yeah.
And it becomes it's tougher. That's why we try to shoot for 2. But again, if you're going to trade, if you're going to trade a lot, you're also going to get more than those 1 point moves, but it's doable. It all depends on your goals and what your aspirations are and how slow it is. So I've talked during the day about the auction results, and they seem to be front and center, affecting the markets lately at noon Chicago time.
Okay.
Here's an example of it, where this is the biggest move we've had in the bond and in the S&Ps in the last 2 hours. But hey, it is what it is, and it's basically following the bond market here a little bit. The bond market actually, they anticipated, as you can tell here by the action in the bond market, was after 10 o'clock. They were actually thinking it was going to be a bad number, and so they slowly sold it off. And this rally here is because all these people who sold it off, excuse me, got a little surprised. They were really expecting something else. And I think and you could tell by the way the action was, somebody was just pushing the market lower, little
by little.
little by little. And, I don't know if he took his profits here or not, but I think he was expecting it to make this move, and he got this. Now he's pretty much, like, all right, I took my shot. Now I'll just get out. And you get this follow through rally to the upside because he's pretty much stuck. And especially since it's going to be very thin in there, if you're trading, if you have a position of 500-600 bonds on, and the thing rallies about 20 ticks, it's a nice loser, but it's also going to take you another 10 ticks to get out of them because the volume is not that great. So but this is what these guys do. I mean, you're trying to get, you load up on a side, and you hope the number comes out and it goes your way and you're happy. If it doesn't go your way, all right, well, you're taking somewhat of a loss and you move on. This is what these guys do. It's not like a surprise, but that's what they do. So how do we trade these slow markets is the question, right? Yesterday, we have one move here yesterday in the middle of the day. We'll kind of have the same move here that happened about, half an hour ago, and probably coincides with this slow move here to the downside. You can see here bonds are having an effect on us. You can see the rotation there on the bond market, is even though it was very light and very thin, You know, those 5-minute bars are deathly. I mean, I just can't believe how thin that was. But it was a slow down tick, and look what the bond S&Ps did. They kind of did the same. So for those of us who are looking for a market to kind of watch slightly, don't pay too much attention to it. If you lean too much on it one way, it always screws you. But just kind of watch it, maybe get a trend. Let's say, so how do we use this motion down here for us? Again, you held a blue band here, right? You came, you know, initially you held a blue band here and rallied. And so that was a nice rotation off the blue band.
Yeah.
Did another blue band touch here. Was another nice rotation. And then when he came here, it kind of went through. So the how do you know? So here's the thing. So you made money on this rotation to the blue band. You made money on this rotation to the blue band. That's twice, right? We always talk about being careful the third time on any rotation to any number or any other situation. And the third time, it actually kind of didn't hold and kind of downticked. But here's so you see this bar, the next bar is lower, and then the next bar stays below the blue band. So we kind of lost our momentum around the blue band to the upside, right? And does it make sense that it did? Yeah, because it's probably the third time to it. The rule, you know, again, remember what the rules are. Rule 1 time is okay, twice is all right, but 3 times you got to be careful.
Not 3 times lucky.
3 times not trading. No, not trading. So other times maybe, but not trading. So you have to, and then you have to consider, you know, why would you even take it 1 time, 2 times? Because it's slow, right? And you know, and you could probably do it for that reason. Now, for the same slowness, if you did it 3 times, you know, it gave you a chance. You know, you probably did not get out here when it dipped. And because we also said that 62 was, you got to, you know, first rotation back to our pivot, right? You almost had to take the 62. So we had the first rotation back to our blue band. This is the second rotation here. The third rotation, if you did take it, let's say you did take it, it drifted down to our our pivot. So you have to take it, the rotation back to our pivot first time. As much as risky as it is, because it's 2 bars below the blue band, but you know what? Yeah, it is a trade, and so if you did take it, the market did come up most of the way. You got 2 points on this, maybe lost a 0.5 point or a point on the other one. You could have bailed out. So now you're seeing what it's doing here. You're seeing that it's holding below the blue band. We can't get above it, and we got a little bit of a shelf. So your exit strategy, 2 or 3 ticks above this bar, 68, right? You know, so if you get in here at 66 or something like that, 67, I don't know, whatever this is, you can get yourself a nice little trade and see if you can work it lower. It held, and you have your stop here at 68. And I think you can see why you have your stop here at 68 and just trade the blue band. The problem is this, is how long do you hold on to this? You know, this is the problem when we don't like to hold on to stuff too long. We like to get in and get out. Your mindset when we're at a VIX of 19, and the VIX, if it goes lower, is even going to get, this trade is even going to get tougher, slower. You're going to have to adjust your trading just a little bit to the lack of volatility. Okay. And well, how do we adjust? You got to pick your spot and put your stop and kind of just leave it. You know, if it holds the blue band there like it did, fine. If it doesn't, you got your stop in. Again, that's if you had to put on a trade. I mean, if you made money this morning and made 2 or 3 trades and made money on them, let's say you made 2 trades. Let's say you sold our first level up here at 67, and you made money on that. Maybe you bought the first rotation back to the pivot, the blue band. You made money on that. We had 74, never got up to 74. Maybe you bought this rotation to the blue band. I don't know. But let's say you just took these 2 trades here. you know, the first level and the rotation to the blue band, and we're deathly slow. And as much as I like to talk when there's some movement, it's very tough to keep this room going when there's nothing happening.
Yeah, thanks.
You know, it's very tough. You know, and so I get I want to say something, but there's nothing to say. You know,
Yeah.
so I have to just keep telling everybody, you know, look, if there's nothing to trade, don't trade. You know, don't try to force it. And that's a lesson that you have to learn from this. Is if you made money on a couple trades and it's this slow, then you have to wait for something like this to develop. You know, maybe you put your first rotation back to the blue band, to our pivot. Maybe that would be an area. I said if we went below the pivot, the last thing I said, if we go below the pivot, then we're looking at 55.
Yeah,
as
you
our
said
first.
so. I was
Right.
there at that time.
Right. So we never got below the pivot. So the first so when I say below, you got to close below the pivot. We never got there. You probably would have to, you know, you buy it the first time to it. And, you know, you have to wait. So, I mean, if you made these first two trades, you know, maybe you put a buy here at the pivot. Then you see this thing develop here. That's half an hour later. It holds this, gives you a nice little shelf. You find your exit strategy. So you put in a trade there. Another half an hour later, you know, it finally starts, you know,
Yeah.
we get down to what do we have 55 and we got down to just about 52 and change here. You know, so, and then it popped back up again, whatever made it go down, you know, it was the same thing as yesterday. This thing was stupid that made it go. I'm sure this thing reason it's stupid why this went down here also. But all those reasons don't matter. It gives you an opportunity to go down to a level that we had and then watch it go up. You have to be very patient.
Yeah.
And just kind of. So I will say one thing about your numbers. You did it again. You told me the pivot is 62 and then you have a 63. That's your first resistance.
Oh, I'm coming.
All right. So you keep.
I made a mistake in the first support level 85. So let me see.
Yeah, that you told me.
Yeah, that's you're right. You know what happened? Of course, I didn't go back to look at my levels again for resistance. I used the Fibonacci. That's what I used, and I just put it. But I didn't even look at it very well, and then the level I used because there's nothing to compare it with. So I just pick it up, and I'm sorry about that. I saw that.
You don't have to apologize. I'm just pointing it out to you. The only thing you could have done up here was take 67, because 67 and 66 and change was the overnight high. You could have said 67. 66, I think. You could have told me 66. I gave it a little bit more space. I said 67, and it actually just went up to 68 and then broke down. So when it gets like that in the morning, if we open up close to the top range, I'm not going to take the top range. It's 66. I gave it a little bit more to 67, and it kind of worked out for us. But that was my logic or reasoning there.
Okay.
Nothing, out of the box. Just I figured if it was going to go back up there, maybe they'll test it. They'll try to push it up a little bit more. And they did. They tried. Nothing happened. They brought it back down. So, yeah. And then you have 75, which is. I'll give you a pass on that, even though it should have been 74. Okay, and only for one reason, because it's 74.
Okay.
And then the upside levels are, again, you're fine with. I mean, you're guessing up here, but I will tell you, you should say 74 instead of 75. That's it. And downside is good. You had all the downside levels that I had, pretty much 37. You have 31. I got 30, so it's close enough. So you did good, and you see why your downside levels are working out better.
I think I don't know. Somehow I'm very good. I'm beginning to be good at the downside.
That's because there is levels there to compare it to.
Okay.
You can go back and find those areas that the market held, and that's why you're getting your downside levels right on, and you can get them close because there's not that much volatility. And because there's not that much volatility, they kind of layer on top of each other, which is what's happening. And that's why you're within 6-7 points of each other, which is good. But that's what the market is doing back here, over here. And that's why you're getting it, because you're finding these areas that the market is giving you, and they're working out very nicely. These little areas that the market is, coming back to. So the reason that your downside support is working is because you've got something to fall back on. Here on the upside, there's nothing to fall back on. This is air, a lot of air. So the problem with a lot of air is that it can do anything, right? Yeah. So that's the issue with that. But your downside numbers are good, and the reason that they're good is because the market is giving you levels to find. I mean, they are right there, and they're easy to pick out and to be able to trade them, because they're right there saying, "Come and get me."
I'm beginning to adopt the principle of dawn that you just talked about. That in trades, I don't know, in this past 1 or 2 days, I've been going for 1 point. It's been difficult getting 2 points. I don't know.
Well, okay, so you're getting 1 point. Is that what
just a point, and I get out.
Okay, so that's when it's slow like this, that could be okay.
Yeah.
Okay. The problem is when it gets a little bit faster and quicker and moves quick. So then your losses are going to be, solidly 2 points while you're trying to sneak that 1 point in, and you get a problem. That's the first thing. Second thing is, if you're going to do that, take a point. Maybe you should do 2 lots, because it is slower and it's not running away from you. And start taking 1 profit at 1 point, and then see if we can save your other one for 2 points.
Okay.
Let's try that, at least when it's still kind of slow. As much as I'm not really, you're just feeling more comfortable, so I want you to get comfortable. And then let's see how many times you fill your 2 points target. And then maybe it'll give you confidence in waiting for the 2 point target going forward. Okay.
Yeah.
Just an idea. Let's try that. I don't think it's not going to cost you much, because I don't think the markets are moving that much. So, even if we're wrong once or twice, we should be okay over the long run, especially if we keep going higher and the markets are slower. Again, there's nothing wrong with trading slow markets. You just have to adapt it just a little bit. If you want to take a point, nothing wrong with taking a point. Let's say we have. Let's do it this way. Let's say you have 60. Let's say our 67 level, okay, that we had this morning. Let's say you put one at 66.5. Let's say you goes down a point and you take your profit, right? Now let's say the market stays still in the same bar, and we start upticking. Now you can input or put in your 67.5 or 67 trade, and try to get a point or after that. And then if the market continues, if you get that, maybe go to 67.5 and put that one in there. I mean, in this case, it kind of did that very nicely.
Yeah.
But not necessarily mean it's going to do that all the time. Like if you did the 55 level down below, you didn't have a chance to do it twice. You only had to do it once, and then it kind of flushed and it came back. And that's the part that's going to hurt you, is that if you try to get a point on your other trades, and then you're only trying to get a point on the 55, and the 55 stops you, then that's where we have a problem, because it kind of flushed down. If you kept a 3 point stop, you would have been okay. On the 50. Down there to 50, I think what it got down here to? It got down to 50. It did not hit 3 points. 52.5.
Yeah.
Right. So, if you're gonna do, give yourself a little bit more leeway, so and that way you can give yourself a stand to trade a little bit. Again, not my favorite situation, but if you're going to do that, at least go to 2 lots and then peel one off, and then peel another one off at 2. And then once you start getting your 2 point profits, you're going to get confidence in maybe leaving the trades in.
I
Okay.
think maybe the problem is about what's the stop loss. Anyway, I understand that concept. Don't worry, I understand that concept. I know it's about what you're gaining for, and then how the level. So I understand that concept. It's okay.
Mhm.
Yeah.
So what's your other question?
My other question. What do I want to ask you? First, where's Chad? I'm not saying he has not.
Yeah, he's not in
Today?
today. He's got something going on,
Okay.
and he's got a business or something, and he obviously knows the schedule, so
Okay.
he knew that we were having class today. And he was in there yesterday, but he's
Yeah.
not in. He wasn't in today, so something must have come up with his job or something.
Okay.
But it's all right. We'll have another class. I'm sure he'll be here next time. He asks good questions. It's a little bit different than yours.
Yeah.
It gives you a little different perspective, and that's what I like about this is that we could talk about different ways people trade, and and it'll help you look at things a little bit differently too.
Mhm. I noticed that it's not. I don't know from my experience. It's not good to trade the range.
It's not good to trade the range.
Yeah, or to trade during when there's a range. It's better to just watch for what the market will do. But when you have this range trade that is going on,
Well, let me ask you a question. So, if we're range trading, well, is this a range trade here?
um, I would think of if you go back a little bit when we started at 8:30.
Yeah.
When you look at 8:30 to between from 8:05 all the way till about 9, we had some bit of range there. Then we went up a bit at about 8:45. Then I think we went into a range again all the way to about 9:05 or even
Okay, so let's take a step back here. First of all, you're going from 8 o'clock to 8:30. Let's start at 8:30. Let's not look at 8 o'clock.
yeah, let's look at 8:30.
Now, so 8:30 starts, and we have a little range. You're right, but in this range, what happened? We went down to our blue band, right? I mean, that's not a bad area to jump in. If you're look, we went and touched our high here. This is the 68. That's what we had, right? And then came down to our blue band. So at this point, we didn't know there was a range. Then it went back up here to the 68 area, kind of held, and then came back to our blue band again. So if you're looking at this without thinking that we're in a range, because we don't know yet, right? I mean, you're looking at you're going backwards now and seeing the range, but you don't know that it was range bound at the time it's happening, correct? I mean, if you could have told me it was a range early, I would play the bottom of the range and top of the range early. I wouldn't play the range late, correct? Because
Yeah,
the later you get into a range play, that's like the third or fourth time there, which is the problem that we have about getting into a trade. It doesn't matter if it's a blue band pivot or whatever, the third or fourth time to a level. And if you're talking about a range, you're talking about a level. You're saying to me is you don't want to trade the range is true, but you don't know it's a range before it's happening.
well, the way I always look at the market when I'm observing is that usually I have this concept that, for example, at let me look at it at 8:45, at the bar at let's see 8:40. Then we went up at 8:45. We went up a bit, and then we went to the high of 3968. Then we came the next bar that was at I think 8:50. I discovered that it was still, within the same of this. We're not really pulling away from, the previous price. It's fine. I know that we are making it. It's, there are so many possibilities at that particular, But I love this kind of trade. I'm just beginning to develop a kind of, a particular policy for myself when I want to trade. That when I'm trading, fine, I know that at that particular time, it doesn't look like a range, but I begin to see a kind of pattern that when prices are just, lying parallel to each other, every 5 minutes, and they are not really pulling away from one another, I don't really like to trade them. That's what maybe that is what I really want to say. But of course, eventually I discovered that my observation is right, that it became a range bound, if you understand what I'm trying to say.
Right. So you're not going to trade when it gets back up to 68 or if it goes back down to 62. Because you saw it happen in the previous bars, right? Or you're not going to trade that range. You're not going to trade that number.
Well, yeah.
Right. Well, that makes sense because 68 is our level, right? And we want it the first time. Now, when it goes back up there again, we don't want it. And it went back down to 63. Again, there was a reason you could have bought it the first time, which was our blue band. But if it goes there again, you don't want it. Now, we didn't know that it was going to be. So what you're telling me, I think, is basically if we get, the previous bars was 68 and the previous bar before that was 67, you're not going to trade it up there.
Yeah.
You're going to wait.
Mm-hmm.
Makes sense, but it's also what we're doing, right? We're kind of saying that we don't want to trade it when that happens, because if it's a level, then it already got triggered. Right? Our level got triggered, so we don't want to touch it anymore.
Yeah.
And it kind of goes with your concept there of what you just told me, where you're not going to go and do anything at that higher level at 68. And then the downside here on the bottom of this range, again, if we hit it the first time, when it comes back here to the second time, you're not going to trade it, right? I mean, that's what you're telling me.
Mm-hmm.
And it kind of makes sense with what we're trying to teach you, right? That you don't want to touch it the second time to an area, even if it worked the first time. So here on the top end, it worked. When it goes back up again, you don't want to touch it. Here on the bottom end, it worked the first time. When it goes back down here, you don't want to touch it because it is riskier. You're right. All of that stuff, what you just said, is true. So it's a matter of, when, now we broke off and we stayed above the blue. So what do you do in this situation? We got above the top end of that range. We got up to 71. Now what do you do down here? If it goes after like an hour, do you go touch it again?
If we...
And that would be the bottom of the original range that you're talking about.
Yeah, which level are you talking about now? 62?
Well, yeah, 63, right?
Okay, 63.
This was the original range from here to here that you said that you're not touching.
Yeah.
But this happened. Now what are you going to do with this level? Are you going to touch it or not?
Again, if it happens again now?
Yeah, if it happens over here. Now, obviously, this held.
Yeah.
But why would you touch it here and not here? Not because here you're in the range and here you're not.
Yeah, I was in the market at that particular time, and then
which time?
Now when we had 63 again, I was still
okay. And what did you do
in the market at that particular time?
And what did you do?
I was telling myself that if we could break that level, I'm going to go down.
Right.
But we didn't. So I stayed until it happened the third time, and then that was when I bought a little. The next if you move back a bit towards your right.
Here.
No, move towards your right.
Here.
Oh yeah. So
what did you do here?
Now, as soon as I discovered that we were able to break the two previous level, and we went down below 63, That was when I said, okay, let me just take a point out of here, and I think I did.
You sold it.
I sold it. Yeah.
Yeah, okay. That's okay.
Yeah.
That's all right. That makes sense because we penetrated this level and we got below it, and so this and another reason. So that's fine. Your logic there, I get, and I understand, and it kind of makes sense with what we're trying to do.
Yeah.
So here's the support. Here's the support again. But once we got below it,
Yeah.
you're looking to sell.
Yeah.
Again, you could have done that and stayed short, right? This all makes sense. And another reason that you could have had, for the same reasons you just said, those are all legitimate reasons to get short. But another reason that you could have said to me was that we stayed and traded below the blue band. And so we're bearish here a little.
Yeah,
we're trying to find a reason to
I'm
sell
sorry
it.
to cut you short. So, one of the things I do is that any trader I'm going to trade, it becomes. I looked at the blue band a lot now. I told you I've joined the army of the blue banders.
Mhm.
Once I see that we are trading below the blue band,
Mhm.
it becomes difficult for me to be able to buy anything above it. I don't. So, don't I always
You're
sell
buying
even-
anything above it?
Yeah.
Above it here?
What I mean
Or-
is that if we close below the blue band, I will sell. I don't buy.
Okay, you could
Yeah.
sell. That's true. Well, or what if we held the blue band? You would buy.
Yeah, of course, I'll buy if we.
Right. Okay. So again, okay, everything you're saying is correct. You're just telling me you have a tough time buying it, but are you going to have a tough time buying the 55s?
No, I won't have a tough time buying that, but
Okay.
I'll have a
That's
stop loss.
that's because that's because it's your number.
Yeah, I won't have a
Okay.
tough time. Yeah.
Okay. So as long as we get that, as long as you understand, you said you have a tough time buying it. I get it. I understand that you're trying to stay short. That's what you're trying to tell me. So
Yeah.
you're trying to, once you get below the blue band, what you're trying to tell me is you're trying to find a place to get short.
Yeah.
Okay. If we close here below the blue band, and if you close here below this level, I'm on. Okay. All what you said is good, and your thinking is good. Okay, that makes all sense. As long as you tell me that you're still buying the 55 level.
Oh, I'll buy the 55, have my stop, But if we trade higher and we are below the blue band, then I would try to stay, short at that particular time. But of course, I'll buy my level.
Right.
Yeah.
So here, let's look at it here. We have a nice double top against the blue band. So maybe it was a sale here off of this low initially, right? You sell it because the first time to it off of a low.
Yeah.
And you have our blue band in the right direction and a 45-degree angle. So maybe you sell it here the first time, right?
Yeah.
Is that correct?
Yeah.
Okay. So you're scalping this here, a couple points. Maybe you got maybe a 2 points there. I don't know. It's close. You got at least a point and a half for sure. And now, if you really wanted to, if we didn't have a number, here's your buy area, right? Above the double top, above
Yeah.
the blue band.
Yeah, it's a buy. Yeah.
And
correct.
it was also a buy on this bar here, the second one, because it came right back to the blue band, right at that area and held.
Yeah.
So, and then came back up. So this rotation, kind of this previous resistance becomes support. And it's also, that's one reason to buy it here. And another reason to buy it is because it held the blue band here on that place. So this is a reason to buy it when it rotates back and held the blue band. Another reason to buy it.
Yeah.
So that's the first rotation. That's fine. It even held the second, but then it became a little bit more tricky on the third rotation. It kind of went through. That's why you don't want to touch it there.
Mm-hmm.
Now we're getting also to the late afternoon trade. It's one counter trend trade there, Robert. Yes. First time to it, off of a low or a high.
Okay.
One time, that's the best trade. So first trade off of a low or a high is a good move to get it.
Okay.
Besides the V spike, yeah, I mean, you know, again, you never know when these spikes are going to happen. So yesterday is another story. Yes, that's, I mean, it was a weird trade. It should never have gone down. But if you remember yesterday, it spiked down and then came back up. And if you, it held the blue band. And then once it held the blue band, you had a buy and you could have just let it go. It was a slow buy the rest of the way. You could have, once it got above the blue band, after that spike low yesterday, here, you know, came right above the blue band and held, and you could have bought it there and, you know, made some, it basically rallied the rest of the day. This happened right around 10:30, so it happened early enough that you could have bought it and just kind of held on to it. You would have made some nice money if you just walked away from it. Anyway, but that's another story. So we do have this spike here that's maybe the market's coming down to and testing again. Again, if you were a little aggressive, maybe you would take it, or you wait for 49, which is what I would do. And I would wait for the 40. So if you were looking for a little trade, maybe you're trying to get a point and a half out of it. Maybe you're expecting a little bit of a bounce here off of this spike. You wanted to get in this bar here. If we're not going to get it at this bar, then you don't want to get it. You just want to leave it alone. Then look for 49. That would be my next buy area.
Okay.
So yeah, that's and look, I mean, unfortunately, you know, here we got the same thing going on, right? Look, bonds, S&Ps, they're kind of doing the same thing. You know, but again, the bonds earlier created the movement upside, and now S&Ps are creating the movement in the bonds down. So earlier it was the bonds leading, and now it's the S&Ps leading. So you have to be a little bit careful of leaning too much.
Okay.
Leaning too much on which one is leading. Triangle, I would focus more on a triangle during the, you know, for bigger targets, like at a daily chart. Like here we have a triangle with this low from yesterday, and it was this 50 here, and got down to 50, let's say 15. So you're looking at 85. So if you look at this nice triangle here, I mean, 85 would be a level that I would look at as some resistance based on this triangle. If we hold this 50 area, see this triangle here. So I would use the triangles for longer range levels, especially these days with the upside with no areas to look at. So here's my triangle, and this is about 35 points. 35 points off of this low brings me up to 85. And that's what I would be looking at. I have that level. Those are the kind of triangles I'm looking at longer terms. I wouldn't focus more. If the markets were moving around more, I would look at shorter term triangles. They're not really moving around more, so I don't look at the shorter term stuff. If you're looking at this triangle, I mean, look, so we did go and come and retest this. If you're buying this is a buy the first time to it. Why is it a buy the first time to it? Because it's a spike. It's sitting there saying, come and get me. And you obviously, it didn't go down to the tick, but you scale in around there, and you're getting a little bit of a rotation here off of this. So again, you're looking for reasons to trade. You know, when the markets are moving around, these things play out a lot easier, quicker. Here, you have to hold on to it a little bit. It's a little bit more nerve-wracking, but it does do its thing. It does hold. Let's see what the prices were exactly. This low here is 32.5. That's 52.5. That's got down to 53.25. So it's really close. Close. If you, I don't know, I wouldn't do it anymore. You know, I would look for it to, after it gets back down here, especially after this double bottom here. So I would definitely not look for it anymore. But yeah, I don't know how you would scale in. Maybe you do 53. It never got down to 53 though. So yeah, it's tough to say, you know, how close do you want your, you know, you have to be around it. it's not going to be perfect, and this is what's happening here. But again, that's if you're forced to look for trade. If you're looking for somewhat of a triangle here, again, don't get here's a little one. This is the 54, and here is 67. So 13 get you down to 61. And if no, 13 minus, idiot, 41, and we have 42. So it kind of works out okay if you're looking for a little push to the downside off of a triangle. Again, just use them to help you with a level that we have. So if we do break down this, we go below this, we have 49 is next, and then we have 42. So you can see, okay, well, we can see why we can get a 42. We have a little quasi triangle right in here. Okay, maybe that'll get us down to 42 if we break it. And if we don't, well, we don't. It's fine. Or at least we have a reason to trade the 42. Another reason. But you never know. So, but again, these markets are slow. We had this move here. This is all a no sweet spot. What does a sweet spot mean? No, there's no way of selling it without without it hurting you in case it doesn't follow through, right? You never know. That's why you keep your stop. So that's why it's also a little bit dangerous, because you're looking for the extension, and you're not going to get a quick extension. You just know it's a target. So keep the target in mind if you're going to trade, and then that'll be your target on the downside. You can look at it that way. And on the upside, we have this 85 here, so keep that in mind as a target, from this triangle here from yesterday. And it held, it's holding. So, again, but I like to look at this triangle on a longer term chart to give me levels above and below versus looking at this intraday stuff. Intraday stuff is a little bit harder to focus in and try to get to those levels, especially when it's slow like this. So we can see, we see here, this area is the same as this area here. We can see that these two markets are kind of moving together. But earlier, this move was created by a move here with the S&Ps. They followed, but then we started going down, and then they followed through. So the way up, bonds led, and the way down, S&Ps led, and that's why I try really hard to tell you, don't look at any other markets to try to give you any idea of where we're going. Because as soon as you lean on one and you think you got it, it kind of screws you over and then does the reverse. And you're like, wait, that's not supposed to happen because S&Ps are going the other way. What's happening? And you're like, and then you get stuck in a trade because you're like thinking, no, it's going to come back because bonds are not going down. Bonds are going up and we're going down and bonds are leading. And you get yourself into a terrible quandary as to watching one market because you're thinking it's supposed to do the same thing and then it doesn't. And, get yourself in a little bit of trouble. So let's not, just watch our market and watch what it does. Let it give you reasons to trade. I keep going back to same old concepts. Let the market tell you what to do. Peter, you got this below the blue band concept. You're good. You're liking it. You said the same thing that I want to say, but in a little different. You're saying it the same way that you understand it, which is fine. As long as it took me a little bit to understand what you were saying, but I got it, and you're saying the same thing I'm saying. Yeah. Different words, but you got it anyway. So you're good there, and but let the market tell you what to do. Yeah. Okay. All right. Any other questions?
No, that's okay for today.
I don't know how we got through this. I thought we were not going to have anything to talk about today, but we had a lot to talk about, so that's good. These days, it's very hard for me to, it's hard for me to talk in the morning because there's nothing going on, and I got some new people in there. I have no idea how to get in, and they're like, I'm trying to keep them entertained, and it's hard. It's hard when there's nothing going on. All right, we'll see. We'll do this again on Thursday.
Yeah.
All right, that's good, and we'll talk to you guys then.
All right. Thank you.
Thanks. Take care.
Yeah.